Morning, guys. John here, Mr. Forexfire. So it's a little bit dark this morning. It is only 8:10 on the 18th of January 2023. It is now a Wednesday. So as all of you know, I've been trying to follow a concept called ICT. I've been doing a lot of smart money trading, but I've never looked at the proper creator of this, which was obviously Michael Huddleston with Inner Circle Trader. I'm trying to go through his concepts the best I can and sharing the journey along the way. So the last 3 days, I'm into day 4 now. The last 3 days, I've made some great profits. It could have been more, could have been over 15 to 20%. However, yesterday I was humbled by the markets, and I'm just going to share the screen. So as you know, I was on around about $150 of profit, and yesterday, again, I should have sat on my hands because I moved the SLs to just above break even. We came back out, and if you just bear with me, I'm just going to get the screen cursor on. You can see here, I got in here and we came down, and I took a partial around about this area. Okay, price come further down, but I moved my SL to just above break even. This bit here is where it come back and stopped me out, but then it went on to give what it did, which was 3%. Very, very annoying. However, I went into the New York session and I fumbled the ball, so to speak, and I lost a few trades. Again, risk management being kept in it. I still believe yesterday's video on the US one was a good video because it showed I kept within a risk management parameter. So yes, the account has took a hit, but it's still over the starting balance. It's on $15, you know. So with that in mind, what we do today, we'll just reset. We'll totally reset, and we just use minimal risks. Okay, so again, I'm just gonna sort of get rid of the fluff on the charts, and from here we are again, it is 8:10 or just after 8:10 in the UK. I'm going to change this back over to New York time and then look for the midnight the 18th, right on that line, because now I use that indicator as well. And then from there I'm going to look at again, if I just go on the daily, let's take a look. I just want to put in previous daily high, and on the wick of that, the previous daily low. Let's have a look. PDL. Go back down to the 1 hour. Yes, that works in conjunction. So there's the separators. Okay, that'll be midnight from the other day. I suppose I could put that one in as well, to be fair, just to be a bit more visual. So that was midnight from the 17th. We've got the previous daily high, the previous daily low. We broke through the price here. So I'll go down to the 15 minutes. We broke through obviously the previous daily high here, taken out liquidity from here. So we've swooped through that, which is a good indication, I suppose, because we could be heading towards we go on the previous daily low, previous daily high. I'll just go on here and knock in the 0.5 area, make that a yellow line for now, and then we can mark in that horizontal here. And if you look, 50% of that is bang on the New York session yesterday on the open on the kill zone, you know. So again, I just want to get that fib. But I'm going to talk more about those fibs as well in a later video. It's another process of ICT in the optimal trading entry. So I'll have to do that in a different video at the moment. So that line there is 50% previous day. I just want to see if I've got the template on that. 50% of previous day. Did I actually have that saved? No. So 50% of previous day. We are waiting till around about 9 a.m., which is 45 minutes time, which will be around about 4 a.m. UK time for obviously the kill zone box to come open. This is where I've been the last day, most certainly. I've been trigger happy. I've been getting into early on a trade. So price at the moment, we have taken out the previous day high. I'm hopefully expecting price to sort of come back into this and come down to 50%. Just going to go to a 4-hour chart a minute and sort of have a little look on where we are price wise. We can see from here that wick up to that wick is a fair value gap. We filled that in the previous couple of days, you know. From there, we do have another fair value gap. That wick down to that wick. We could be heading up to this area. We'll go down to the 1 hour. And like I say, price action is pretty much solid, to be fair. There to there. We've got a couple of areas just above us where we've got fair value gaps. And then again, we've got residing on the top, which I think's too far ahead of us at the moment. We've got a liquidity area there. I do believe we'll come lower before we go any higher, to be honest. Go down to 15 minutes. Excuse me. So within that, I'm just going to get rid of the price here. We're just going to use minimal risk a day, maybe a 0.0, a 0.10, just to try and build some pot back up. We've got the midnight open, okay? The midnight open here is the opening of price of the new day, okay? So we're going to set with fence posts up and just do this slowly. This 8:30 line is where the open of the New York session was yesterday. That's the 8:30 line. It also, like I say, from the high to the low of the previous day, it's also the 50% area. So 50% is a magic number in anything on trading, to be fair. It's a bit like these fair value gaps, you know. There's a one there up to there. Normally 50% will be fulfilled. Again, look where the previous day high is. That's more or less slap bang in the middle of that area, you know. So again, 50% seems to be a good magic number. Midnight open price. Let's have a look. Horizontal rear. And we'll just go down to the template. Midnight open. So that's the midnight open. And we'll just put this possibly on a dashed line. So we've got our ducks lined up. Again, just to run through this, we've got the midnight open, okay? Midnight open of 18th of January. We've got the midnight open price, which is the dotted line. We've got a previous daily high, a previous daily low, and then we've also got 50% of the previous day. So we've got some target areas, in fairness. Again, we want to see the yellow box, which is the London zone, the London kill zone. We want to see that come in. It's going to be around about 40 minutes away before we start getting that. So we've got targets to the downside, and we may have 1 or 2 targets on the upside as well, okay, with regards to fair value gaps and also highs, you know. I'm going to just go over to the weekly as well. So that's a weekly high. I'm just going to put in there weekly high. Just do that there. This here is an FVG. This here is again an FVG, and I'm going to go back down to 1 hour. Put that over to the right, and we're going to move that over to the right, just so we've got some like info boxes, you know. So we'll pause the video. We'll be back in a short while. We've got all our ducks lined up. We'll see what comes into play on the New York, on the London session, I should say. 15 minutes. We've got a low. Do that on there. Just going to put UK low. Mark this in red. And then pre-kill zone. UK high for the day. And we'll keep it as that, guys, okay? Again, like I said, it's just about being visual. And I'm going to pause the video. We'll be back in a short while once the box starts forming. All right, guys, so now we are entering pre-London startup, okay? And we've got the kill zone now coming in. What we've got is the UK high of this session so far, which is right on the money there. What I want to see is possibly, this is on the 5-minute as well, a break there, and then possibly a break there as well. I'll take this down to the 2-minute. We'll see if we can get a couple of breaks. What I'm going to try and do today is try and get not just on the 1 minute. I want to go up to the 2-minute as well to get like further confirmation for these imbalance areas. We have, like I say, made a UK high for today. Certainly, we've taken out a lot of liquidity on here. The only sort of liquidity grabs we can go for is up on the top end here, where we've got fair value gap, and then further up we've got a weekly high. But again, prices from there, from where we are, you're talking what, 36 pips, 80 pips, and 120 pips. So I'm just going to buy me time with this today. And like I say, we're only going to risk a 0.10%. So we're not overly putting massive risk into it. I'm trying to keep a correct mindset for risk management, slowly building. Again, I've been trading for around just over 5 years or so, and I've been through many ups and downs. And the more you sort of revenge trade, the more you sort of think, where I need to double up on my risk. You just get your fingers burnt a hell of a lot more. So You just got to learn to step back, and yesterday was a great example of that. Yes, I took a few losses, but when I stepped back and looked at the account, what it was on, and what I still had as a slight buffer with that 15 profit for the last 3 days, I can still get into that and build upon that little bit of equity that's on there. I don't look at this as, yes, it's only a paper trading. I don't look at this as, yeah, I've got 10 grand there, but you've got to treat this as if you're using real money, you know. Just continue to use what you've got as a buffer, even if it's pennies. Pennies will look after the pound, you know. So you just risk what you've got there. Never try and risk unless it's necessary to go into the negative of your account. If you can get that little buffer above your starting balance, then use the risk parameters and the risk management to only use what you have profited, you know, so you never have the account in danger, to be fair. But like I say, we're going to let most of this morning play out. I think I am going to hold until after 9 a.m. It is currently in the US 20 to 5 in the morning. You look on the top of here, we are around about 20 to 9. So I've got 20 minutes. I want to go into the London Open before I start going in for buys or sells, you know. So I've got lower highs or higher lows marked out here. What would be good to see is this price leg at the moment, if we feel to make a higher high and we start breaking down below here, because as we come into the UK session fully, then I can start looking at again, if we bring on the plan, and I follow this plan, I'm going to follow this plan. I'm not going to deviate from it. We look for the liquidity grab. So in this instance, if we fail to make a high, the liquidity grab is going to come from that end. Okay, so as you get the liquidity grab coming through and taking out that there, you then got your displacement, and what you're looking at is from that being made, you're then looking at after the liquidity grab, after the displacement, you're looking for a fair value gap because you failed to break these high points, if that makes sense. So the liquidity grab is going to be one or two things. Obviously, the one that I'm favouring at the moment is going to be coming back down to the low side, because we're going to fail to create a double top or even a higher high. So we look for liquidity grab to the downside. The pullback, and like you say, the displacement will follow with regards to leaving behind that other fingerprint or footprint of the fair value gap. This time we would knock it up to a 2 minute to make sure that fair value gap's there as well. We'll add that into maybe the plan as we refine things, and then we'll take a reaction from the rest of the setting your limit order, put the SL and your TP levels. Again, we just need to look for the low hanging fruit, which will be the point of interest as we are coming down to these areas here. Okay, from there, guys, the other way, if it went the other way, the liquidity grab in this instance would be possibly it would go above this area, but ideally you would be wanting to go into a fair value gap here as a target area. But I'm favoring the sell-off at the moment. Okay, so hopefully you're taking some form of little snippet of knowledge away at the moment. Patience again. I want to put that on here today. Patience. I just want to make sure I'm patient, and I'm going to have that in pink, and I'm just going to have that up there, just so I can sit on my hands. Again, it's not about smash and grab and being a hero. We just need to understand price will do what it wants to do. If we put our fence posts down and we react from when these fence posts are knocked over and taken. Okay, so I'll pause the video. We'll be back in a short while. We are now coming up to 20 to 15 minutes of going into the London Open. Okay, so I'll be back in a short while. Hey guys, just another quick update. We are now 5 minutes from going into the London Open. This here is just pre-London setup. So we are now 8:56 London time. That's 4 minutes to go before the bell sounds for the trading floor. From there, we still have the parameters set up for these lower sides. We have got the UK high from the open at the moment. Again, in the US, it is coming up to 4 a.m. Okay, so again, we have to be patient. We are, like I say, I'm going on this and I'm staying with it. I just do not want to get trigger happy. We are going to wait for a break on these if it comes, and then possibly move up for 2 minutes and look for a fair value gap on a 2-minute entry rather than the 1 minute. So we are letting the spread move out a little bit more than what we would do. Again, we are ranging at the moment. Pre-London Open, we are ranging for around about 17 pips. I want to see a break to the downside, if I'm honest with you. I'm not going to be overly confident if we break and trade to this higher side, but we shall wait and see. Again, we'll get in on a trade. And just remember, we are going to protect what we've got left at the moment. So I'm not going to be going 1% or 0.5%. The game plan yesterday was if we got this over a couple of $100, then I'd be looking to up the risk into 1% risks because we took the hit. I'm going to be bringing and reining the risk management in. So we're going to be trying to grab the pennies to look after the pounds again. So I'll probably be risking a 0.10, okay? And again, you'll see the importance of doing this. If we then feel to grab any profits and we eat into this a bit more, then we have no option to start not overly risking, but again start eating into the 10k. And we have to treat everything we do as if it's real money. Again, this is only paper trading. I'm into my 4th day now of trying to learn this concept. I set out with a game plan, and that game plan was the 7-step plan. I'm going to stick to following it. The only thing I'm adding to it today is obviously the fair value gap part. We're going to be looking at it from a 1 minute and a 2 minute aspect to see if that's going to widen my fence post a little bit to help me try and gain a bit more momentum on what we are looking at and what we're taking. Okay, so we've got 1 minute left for this London Open. Again, roughly 25 seconds. We might not see a spike straight away, but again, we should see a little bit of volatility. We'll see what comes into it. As soon as this 1 minute candle is done, we've got 14, 13, 12 seconds left, and then we are officially on London trading time. Again, if I go down to the UTC, go on to London, you can see here, next candle as you go down is going to be the 9 o'clock. There's the 9 o'clock candle coming in now. I'm just going to take this back to New York time, because that's what we anticipate and be traded on with ICT. Excuse me. Let's see what the next 2 to 3 minutes brings within candles, okay? And just to look at what we've got here within this range here, again, we don't have any sort of fair value gaps, anything like that. We've just got a build up of liquidity from a trend line aspect. So as we're bouncing up and down here, we've got liquidity. Will there be just a build up of momentum where we've created a double top? We've not had a spike higher than this. So we're building up a load of liquidity. So then we're going to take out that liquidity to leave a fair value gap behind here. We just have to wait and see. I still believe we're going to come down to the downside, to be fair. Failed to make a higher high here. And we're going to run out of space in a minute, because again, look, double tops here. Again, this is going on to retail sort of methods. I don't trade retail methods, but I still look at the patterns and things like that. I do believe, from what I'm seeing, as we run out of space, we should be doing this sort of thing. And as we fail to make these higher highs, we'll make higher lows because we've broken some of the structure on the liquidity here. Come back up to tag into this, to come down, to break the full of this liquidity, to then come back up as we've got that liquidity grab. We should then hopefully between here and here of that range, we should be seeing a fair value gap. Now, I'm hoping, like I say, the more I do this, the more repetitive I get with it. I'm hoping that you guys are going to be seeing what I'm getting at and what we should be anticipating. Okay, it's not going to be in stone that it's going to happen, but this is what my directional bias for today, what I want to see. Okay, so I'm going to pause the video. We'll be back in a short while. I'm going to leave this annotation on there just to see what happens with it, and we'll see how it goes. Then we'll delete off the lipstick, as we call it, and then we'll see where we are with regards to price flow and everything else. Again, from an aspect of breaking lower, I really want to see this liquidity on the bottom side taken fully before I look at any sort of fair value gaps, because there's too much of a range here with regards to these higher lows on the way up. We can see we're now starting to break them. Staying on this at the minute, there's, like I say, there's liquidity there. It's been taken right there with price. Now it's going to come back up. And when we talk about fair value gaps, again, there's a fair value gap comes there. So we might see price come into this area for short term before dropping lower, or it might just simply tank and go for further liquidity grabs, which there is going to be one around about there. And it's testing between the two lines. It's doubled. Again, just remember there's a little bit of a fair value gap here. We might smash through this bit. We'll just give it, I'll just stay on the recording for a little while, just so we can watch the ebb and flow of price as it's moving. And again, this current swing, or this current sort of price leg here, it's only around about 13 pips, you know. Are we going to come back up and possibly test into this? Like I said, there is a fair value gap there. And this is all the markets do. It's all price does. It takes liquidity and it creates liquidity. Okay, so we've taken it here. Okay, so as it's taken it there, and it's taking it here now as well. We've just spiked below that. So if I just get rid of that where we have taken it, as you've seen, we have now officially taken the liquidity here. This is a good sign and a good indication for myself. Again, I want to see this side taken as well. If we take this side, I maybe then jump up to a 2 minute and then look for a fair value gap as we got that displacement as well. So all's looking well for what I'm seeing at the moment. It's behaving as what I see. We've got a pennant here, double top, failed to make a high. We've got liquidity all residing here. The last part of that liquidity is certainly on this part here, okay? As we broke out from failing making these high highs, we are now going to create lower lows. The displacement and the push coming out from that liquidity grab leaves fair value gaps behind from this stretch of the leg coming down into the lower low. So price will come back and possibly make liquidity, because as it takes the liquidity, the making of liquidity comes from the retracement. So as that retracement comes back in and spikes or touches into these fair value gaps and then continues with its continuation trend down to take more liquidity, the liquidity that it leaves behind is from a form of a retracement. Okay, so again, like I say, I hope that is sort of making sense for you today. I'm just going to delete that off, and as you can see, like I say, price is acting pretty well from what I was seeing earlier on. We're now possibly going to see some form of a retracement or a pullback. I do really want to see this taken, though. If I can get this bit taken before this is touched, I'll be over the moon with it, to be fair. But it looks like it's coming back in to touch it now. So like I say, as you can hear from what I've been saying, I do have not a massive amount of knowledge, but I have a fair understanding is the correct word, I would say. A fair understanding on terminology and obviously price action as it moves. I understand structure in some form. Okay, so again, we're starting to see that retracement moving back, and as we move down and look deeper into this price leg, okay, we don't have much of fair value gaps. We actually have the tiniest amount. We do have the tiniest amount of one right there. As we delve deeper, we'll see we'll get a reaction or a burst through that. We can see it looks like we've mitigated right through that, and now it's going to come back into this area. It hasn't quite wicked into that. We'll get rid of this, and we delve even deeper. And when you look at this, like I say, ring fence, let's get this down to that wick. It's now coming into play on that. We'll scroll back out. Scroll back out. I really want to see this taken, to be fair. I want this taken out on the low side before I even contemplate to getting in on a trade. I want to get rid of that. That was the double top where we failed to make a high. We've now come down and took the liquidity on this little trend line here. We'll get rid of that. And as you can see, from the movement of what I was expecting, it's starting to come into play, to be fair. We may get the touch into 50% of this particular area. Let's have a look. So the 50% of that, there we are, there's the 50%. It's definitely 50% of that area. It looks like it's going to fully mitigate into it, to be fair. Let's get rid of that. Now, if this continues to push up and it breaks above this area here, okay, now that will change the game altogether. I want to see the consolidated area structure hold. I'm just hoping it's coming down as an inducement to sort of try and trick buyers, okay, because as we get this minor support line, it's going to bounce. I'm hoping it's just tricking buyers, and then as we come up, people are thinking they're in profit, and then I hope we'll get a feel from around about this area before we go further up to then come into the true move, which, like I say, I am anticipating a sell-off. Like I say, could be wrong, but that is my feeling for this. If we do get that sell-off, we've got liquidity here and liquidity here. From there, I will be looking for, like I say, after that liquidity grab, the displacement comes in, we'll be looking for that fair value gap. So now, this fair value gap looks as if it's been met. It looks as if that's been fully met. I'll get rid of that. And then hopefully now what I'll see is obviously that drop down with a bit luck, and we still fail to make this higher high. Because we haven't even made a lower low neither. We've just come into a consolidated zone, you know. Like I say, from there to there is just a consolidated zone. We've been stuck within that higher high to the higher low, so we haven't created a lower low at the moment. From that aspect, from there to there, again, if we put in that 50%, we've come above the 50% line, so we're in, I think it's called a premium discount at the minute, from a premium. Let's just see, we start getting that sell-off. Hopefully we will. I'll pause the video, and then hopefully by the time we come back, we've either broke structure to the low side or we've broke it to the high side. Mainly looking for a break of structure to the low side. Be back in a short while. Hey guys, it's just come to my attention this morning again. One of the guys in the group has just mentioned, as I looked in the Discord, that the PPI's out later today. Now, What that is, it's obviously there's a lot of news coming up. There's going to be a lot of build up towards the USD news this afternoon. So this is UK time. This is for when the New York Open comes. So I'm going to stay away from the New York session today, simply because of this. Because when it gets to 2 p.m. or towards 2 p.m. in the afternoon, that's when the New York Open comes, you know. So maybe this is a stall before that actually comes around, because they're waiting for news to come out before any volume comes into play. So again, I'll stick with this session today, but this is just going to emphasize the one word that I need to do, and that is be patient. You know, so again, if we don't see a trade, we just need to understand this is possibly why. I'm not going to pull the trigger too early yet. Again, the method and what I want to see at this time, I want to see this taken out here to get that liquidity grab, and then leave from the displacement. I need then to be able to look at that 2 minute and the 1 minute, see if that fair value gap forms. Like I say, once we get that push out, and then we wait for that push to come in, and then I'm going to take the trade from that fair value gap with a very good possible good risk to reward. You know, at the moment we are still consolidating within around about a 13 to 17 pip range, you know, so just need to be patient, sit in our hands, trust the process. And again, the kill zone, I do believe, comes up to 10:45 UK time. So if I go to the London, 10:45 UK time is going to be, and just measure that out, 10:45 is around about there. So I've still got an hour and 25 minutes before I need to even contemplate and getting in on a trade, if that makes sense. So again, we're just going to wait and see what happens. If we get a push out to the higher side, I will possibly look for that smaller trade with the fair value gap left behind as well on the 1 minute or 2 minute. But as we stand, we need to be patient, have that patience, and we just follow the trading plan. And we've identified the fence posts where we are pre London Open. Okay, we've got this here. Again, a fantastic ideal trading option would be if we come down breakthrough here. Like I say, we have this here, what we marked out earlier. We'll see what happens. But overall, my thoughts at this time is guided towards this, the 1:30 p.m. UK to 2:15 UK. This is slap bang on the US Open. So again, we are trading the GBP USD. There may be little to no volatility up until around about that time, but we shall wait and see. Again, it's not a process about being a hero. This is just about understanding the markets and just trying to get little bits out of it where we can. So I'm going to pause the video. And again, I hope you're taking some little bit of snippets away from this, whether it's big or small. If you are watching this, please drop your comment below. Let me know. If there's anything that you want to see on the channel, let me know. And again, if you want a shout out, just mention your name. I'll give you a shout out on the next video that we do. Okay. So I'm going to pause the video. We'll be back in a short while. I can see today is going to be a hard day to trade in the London session, because, like I say, that CPI data news that is going to be coming in a few hours' time. You know, we may get stuck in this range. Like I say, we need to be patient, and sometimes you just got to understand you're not going to get the entry you want. And sometimes it'll come and it'll be gone just like that, you know. So we're stuck within that range. We've had a look on the news to see what's happening. Thankfully, because of the Discord community I've got and what we built, we've got everybody looks after each other, and it was brought to the attention about the CPI news later today. Again, this is a top tip as well. If you're on funded accounts, okay, with prop firms, always stay out of the red folder news events, because most prop firms will let you trade the news, but believe me, you need to stay out of it, because that's where you'll get slippage on the accounts. And like I say, it doesn't matter which prop firm you use, it's inevitable. It's always going to happen, simply because obviously the volatility, and you'll always get people moaning on about the prop firm done this, the prop firm done that. It's the news, guys. It's just the way it is in the world of trading. With so much volume and so much volatility, you get a whipsaw effect, and you have to stay out of the news. There's a lot of prop firms out there will pre-warn you that the news events are there and they won't allow you to trade. They actually tell you to close up your trades pre-entry. This is why, I mean, myself personally, I won't trade the PPI, the CPI, the FOMC, or the NFP news events. I just won't do it, because what you'll see is you'll normally get these sort of consolidated areas, and what happens is you'll get whipsaw between the high and the low of those ranges. So that's what I'm going to be sort of anticipating later on today. However, we might get a trade out of this today, where again, I've got over an hour left of this. It's just about, like I said today, being patient with the trading plan and not getting trigger happy. Got to be patient, and that's the trading plan. As long as I keep that on the screen and I'm keep that in my eyeball distance, I'm going to see patience and then the trading plan as well. So again, sitting on my hands, I'm doing well this morning, to be fair. I'm not getting in too early. I've identified the range we're in. I've identified the previous daily highs, the previous daily lows, the midnight open of price, the UK high, which is up here, the UK low from the start of the trading session. As we look back, we've got the fence posts put in, cemented in place, and now we're just waiting for, like I say, the patience, which is on here. Excuse me, waiting for the patience. Then we'll come into the trading plan. We're looking for a liquidity grab from one of those POIs. We've made that UK high, and as we've made that range from the low to the high, we've got an intermediary price in the middle. So I've got two areas where like I say, I was expecting price to come down to mitigate through. That's when we have that liquidity grab, guys, and we follow with that displacement. And once we get through with that, we are then looking for price to obviously sort of come back into the previous swing leg from where we got the displacement from, and that liquidity, and we look for the fair value gaps. But with a twist, instead of doing it on the 1 minute, I also want to go up to the 2 minute to see if there's a fair value gap within that 2 minute area as well. Okay, it's just going to give me a bigger, wider scope to trade from, and obviously we're going to see what sort of results we'll get from that. So at the moment, we're still stuck within that range. And I know I keep repeating myself, but the more I go over this, the more I repeat it, not only for myself, it gets engraved into the back of your head, it gets engraved into your mind, but also you guys that are following me and watching these videos. Again, it's a learning process. It's a journey. I'm not here to be perfect from the outset. I'm here to do a daily vlog, a daily video. So even when I'm finished these videos, I can look back on what I've done personally. And I do this all the time with the videos that I do. I'll always, going into the weekend, I can go back and watch my videos so I can reanalyze what's happened. And while I see price moving on the videos that I'm doing, I can then listen back on myself to see what I'm seeing, and then see within the chart if there's something that I missed, and then it gives me a better understanding going into the week after, you know. So again, we've got 1, 2, we're coming into a treble top. Normally when you get 3 touches to a high or 3 touches to a low, we might get a fake out. So I need to be careful on this, and if we do get a breakout to the high side, just got to be mindful. See if there's a good 5 to 10 pip push out of that. See if it's going to come back in the zone, because I just don't want to get into a trade too much, if that makes sense. I've got to be able to have a complete break of structure and if needs be, whether it's on the low side or on the sell side or the buy side, I just need it to give it an extra confirmation with a further push whenever it makes that higher high, or whether it makes the lower low on whichever side it's going to go on. You know, we've just got to make sure that we have the confluence and the evidence there that suggests it's going to be a continuation on the trend to the up, or a continuation in a breaker structure coming down. Okay, I hope that makes sense. Again, key word for today, guys, is this here: it's patience. We've learned from our mistakes yesterday. We've just got to be patient and just wait to see price showing its hand. Stuck in that consolidated zone at the moment. Hopefully you are taking notes. Hopefully you are taking some little bits of words of wisdom from the mistakes that I've made in the past. And then you can carry and take that forward for yourselves as well. Again, please remember, if you're watching this stuff, drop your comments below. Let's get some engagement. Comment, like, and share on the stuff that I put out there. I don't profess to be perfect, never have done, never will do. I just like to share the journey and process that I go through. All of the highs and all of the lows, whether it's win, lose, draw, or break even, you know. So again, let's pause the video. I'm going to go off and make myself a cup of tea and get myself a shortbread biscuit, and then we'll be back in a short while. Right, guys, so we've finally had a breakout. However, it's a breakout I wasn't anticipating. Like I say, I would like to see a 10 pip move out, to be fair. Let's see, I just don't want to see it to be a fake out, to be honest, you know. See how we're coming back in now. I just anticipate we've had a runabout. I'm knackered because I've just run upstairs. I've been making a cup of tea. Let's have a look. 8 pips from that high. We're coming back in. This looks as if it's been a fake out, but it's still a high, you know. It is very much still a high. Which means we have to move the UK high over to here. Structure wise, just going to put another line on here to be fair, to see if we actually come through this area here. And again, forgive me for putting so much lipstick on the charts. We've had what possibly could be a fake out, but again, we've got liquidity residing on here now. So I just want to get rid of that as well. Just want to see if we break lower. Charts can be cruel at times, to be fair. Like I say, I'm going to pause the video, guys. We're going to come back. We want to see any of these structure lines brought back through, you know. I do believe we might just come back and buy 5 pips or so in here, and we might come back up and start fluctuating between this high here. I do believe it's going to be hard today. Definitely for the purpose of this here, you know. The euro at the moment, so 10 a.m. we're going to be coming up to CPI on today on the euro. It's just yellow flag at the minute. Red flags is just what you need to stay away from. And like I say, this could just be the build up in the consolidated areas, ready for that massive push. We should see a huge spike this afternoon, to be fair, on the GBP USD. We've got a 25 pip range from where I was wanting it to actually come down and break through. Again, with regards to that, what I'm calling a fake out at the moment, it has only given around about 8 pips. Now, I said earlier, I want to see 10 pips or more above that previous structure high. We might get that second surge and break this higher high. It's on its way back up at the moment. But like I say, after having such a good start, on the Friday and the Monday, and then the Tuesday, not so much the Monday because it was a bank holiday, but certainly the Friday and what was it? No, yeah, it was a Friday. It was a Friday and the Monday. I had the two good starts. Excuse me. So the Friday and the Monday, I had really good confidence. It was building and building and building the profits that we got. Looking back from what we had taken, okay, I had where on the account I had been stopped out early. I was stopped out early because I moved my SL. So this is where this comes into play now, the patience. If I'd held the patience and held the structure and the bias, like I say, was correct. And like I say, if you watch my earlier videos from the other day, the account quite possibly it could have been around about 15 towards 20% in growth over them few days, you know. And it's about trusting the bias that you set up and when you get into a trade. Unfortunately for me, because it's a new method and a new style of thinking, it comes part and parcel on being able to trip over at times. And I was moving my SL to just above the break even or just below the break even, depending on which side of the price I was on. And the price was coming back and stopped me out. So what could have been a potential 15 to 20%, like I say, I'm keeping all this data and I'm understanding what's happening with it. And it was stopping me out on those break evens or just over. I was literally, growing the account by just 1 or 2%. Now that's a huge difference when you're looking at a 10k account. You're looking at a difference between the 1 to 1, like 1 to 15. A 15% could quite easily be like 1,500 on the account of profit, whereas I got stopped out early as I moved my SL. I'd only taken 1 to just over 1%. So with that in mind, on a 10k account, you're looking at 100 and odd, 150, a 1.5%, I should say, like $150 profit, which is nothing to be sniffed at. It's still good, okay. 150 profit, but if I held the bias and held the structure, I could have had 1,500. So there's a big gap between that, you know. But that $150 profit has helped me buffer, and then obviously I took that smaller thing today. Now we're moving up at the moment. Just going to bring this over. Now I'm moving up. I'm going to probably look for a buy, to be fair. We'll go for a 2 minute. We've got a 1:40 in here. We've got a fair value gap at 2 minute there. Now we've got that big push coming. We might be able to get in on a half decent trade now, to be honest. I want to make this orange for the fair value. So I'm testing the 2 minute fair value gap now. 1:13. We'll go back down to the minute. Again, I do believe price is going to come back down. We'll start setting up the ducks. We're going to go for a long. And if we go for a possible trade here, below that protected low, this is going to end it before I want to be fair. And then low hanging fruits, 1.5% of that fair value gap. But like I say, we could push for this up here, but I want to go for the low hanging fruit, if I'm honest with you. Let's have a look. Back up to the 2 minute. Got 20 odd seconds. So again, we've got 15 pips and 22 pips. So if I get an entry there, trade, we'll get this set up. So we're going to go 15 pips for the stop, take profit. We'll go for 22. I only want to risk a 0.10. Now, I had this predetermined yesterday, so I would only be risking a tenner. So then it leaves me with £5 buffer. So if I get that set in, That's going to give me the risk. So then if I lose this, I can bring my risk management back down. And all it takes is for me to get into that one winning trade. I mean, if this gives me a winning trade, I'm going to double my money back to 30 quid. And we're staying within the risk management parameter, you know. If it loses, we're then going to bring the risk based upon the account down to a 0.05 risk. So then if we lose that, we would then go back to break even on the account. So you've got to be able to not just be patient, you've got to be able to be aware of what you're using, what you're risking, and what can be the reward from that risk at the same time as what is the risk overall and fairness. So we've ended a trade basically because we've now went above the structure high, where we were consolidated. We've got a good 20 pips over, so it's double over the amount I wanted to see. From there, we've now got a new UK high at the minute, which I'm not going to move this at this time. This here, this is a fair value gap from a higher time frame concept. We're now mitigating into that. Generally, like I say, 50% play is where we normally come into on these sort of things. The 50% is there. I'm just going to get rid of that fib. Just ignore what that fib is at the minute. And if we scroll into price, I would like to see an entry before this here, because if we get an entry first, then I would take a partial off here. I would take a little bit of it off, to be fair, but we'll see what happens. What I'll do, guys, is I'll pause the video. I'm going to go and finish off making me cup of tea, and from there we'll see if we've gotten a trade entry, and we'll see what happens with this today. At the moment, again, we've used proper risk management. If we lose this trade, we're still in that little bit of profit, but you've got to be able to keep your hand on what you've achieved, you know, and instead of just going, right, revenge trade, let's just put all the eggs in one basket, let's go for it. You've still, doesn't matter whether it's pennies or pounds, you've got to look after the account, okay? Looking after the account keeps you in the game long term, okay? So hopefully you take something away from that. That price is just about to come back into an entry, which is what I want to see. Again, that's the 50% medium line there. From there, I want to see the 50%, which is there. The 50% of that low to that high is here. Okay, so it's good when you get a swing point, you normally get a retracement back or a 50% area. I'm pretty happy with how things are stacking up on this at the moment. I'll give it another second or two before I pause the video, and then I go and make this cup of tea. Then hopefully, not watching the trade, hopefully by the time I've gone and made me cup of tea and I come back, we'll have an outcome on whether we have been successful with the trade or we have actually been stopped out. Just give this another minute or two. That's 2-minute candles just about to close. There's a new candle there. And this is what was happening with me the other day, guys. You know, look at this price action at the moment. From there to there, I was one pip of that being entered. It's so damn annoying at times, to be fair. But again, test your patience, I suppose. We'll see what happens, see if this gives us an entry. I'll be back in a short while. So we've got our entry, cup of tea, biscuit of choice today, Kit Kat. And here's the dog. Dog's come to see. There we go, getting there. So we're in drawdown at the moment, which we were sort of anticipating, to be fair. Simply because this here, the swing, when you look at the swing from the low to this high, Look where it's rejecting at the moment, the 50% line. And like I say, when I see a 50%, you can see there the 0.5, the yellow. We're bouncing off the 50%. So again, nice little area. We wanted to make sure we tagged into that entry, to be fair. Again, I just want to mark this high as well. Hopefully we're going to get a little more of a push to the higher side and we can double up on what we're risking on here. Again, I'll pause the video, be back in a short while. Overview before I go and pause this. Again, I still believe we're going to be coming down here, to be fair. Because looking on the Forex Factory News and what we're anticipating on what's coming up, okay, this might just be the Great British Pound pushing up into these areas where we've got fair value gap. I'll just get this over. They're going to let me go here where we've got the fair value gaps, okay, and then we've got the weekly high. Price may just want to come to mitigate into these before we tank off a little, because again, on the weekly, when we look at this, we've got a fair value gap as well, right there on the weekly. And look, when I say 50%, we've got the previous daily high is bang on right where that weekly fair value gap is, you know. That's the previous daily high. So again, we might see price that came up and then we might come down and tank out, you know. Let's go back down to the 2 minute. So where I was wanting to target initially, this is the weekly imbalance. Again, 50% of it. It's just, there's so many different things stack up when it comes to fair value gaps and things like that. Again, this may quite well be that fake out what I was expecting, but we'll just hold price and hold the structure. Hopefully we'll come up to mitigate into this. I might look, if we do get a push up, I might see about coming out of this trade a little bit earlier than fulfilling the whole fair value. Possible close early after I reassess things. So I'm going to set the alarm. I'll pause the video and I'll be back in a short while, guys. Yeah, we have a guys, we got stopped out, albeit the setup what I had on the trade, it didn't officially come down to here. It's still in drawdown, but for some reason the broker on the paper trading had closed it out. Let's just see. This will be annoying if this goes up and then goes to where we were expecting. Looking at what I'm seeing at the moment, it's going to come down. There's me Geordie side coming out. It's going to come and fulfill through that, what would be the official area that I had. Again, we've now more or less ate into all the profits of what I've been looking at. Pardon me. We'll see what happens. Have me a cup of tea. Now, this is a test of mindset and everything else now, you know. So we've ate right into the profits that we've taken. Again, I think I'm basically looking back on what I've done and why I've entered and how I've entered. There was no entry there, in all honesty, and I'm gonna hold my hands up to it. It's a journey, it's a process, it's a learning curve. Again, what I will be annoyed at with this is, you've seen me set this parameter. If this goes up and it hasn't, like I say, hasn't tagged through all this, but if this then goes up into this area, it will be annoying because, like I say, I had the area set, but for some reason, broker, whether it's the spreads or what, it's decided that it wanted to take it out. But we move on. Again, I'm going to pause the video because I'm going to give this another, what, 45 minutes or so, because we are in the London time here. 10:45 was the cutoff. We've just been consolidating. It's a lesson learned, I suppose, simply because I do believe we're going to have the build up to this, and then the volatility and the volume's going to come at this time at 1:30 UK time. Again, from there, I'm just going to change this back over to New York. It's just annoying when these things happen. But again, it's a process of love and hate. You've got to be able to take the lows as well as the highs. And again, it's not so much a low as in a bad low, because we've been protecting the account, you know, and that's what I want you guys to take away from this. Yes, it can be frustrating when you're not winning, but at the same time, when you do take that step back and you look at what you've done and how you've contained, and that's the word for today as well, when you've contained those losses and how you've protected your capital, so to speak, you know. It's when you contain what's happened and you contain everything that's gone against you, and how you've assessed and risk assessed what you've done. You've seen you've got this lump that you've got in the market, which is the 10K, but the side pot is the equity that we built over them last few days, 150. And yes, we've got this huge amount, but you don't need to be risking the. I mean, I see so many traders saying, I only risk 1% a day. No, like I say, you're going to come to a stage where you're going to have losses, okay? It's inevitable. I don't care how good of a trader you are, you know? You will come a cropper, and you will come a stage where you hit so many losses in a row. And it's how you be able to contain and risk assess and be able to manage when you come into that area, because it happens to everybody at some stage, how you assess your ability to say, right, yeah, we've hit a few losses, we've hit a few SLs, but let's have a look what we have got. This is the capital that's over there. We are able to do what we can do on a day-to-day basis because of that. But because we've got that there, we've now been able to build this little equity pot here. And if we build this equity pot here, I'm just going to risk a certain percentage of what's been built here. I don't want to risk what's allowing me to be able to do this as an overall aspect of a, whether it's a side hustle, a job, or what you want to do day to day. That is there as your protection to be able to create what you want over here, if that makes sense. And I hope that does make sense to you guys. Again, this looks like the prices, looks like it's going to push again. Very annoying that it hasn't officially stopped out, but the spread must have knocked it out. But I pause the video, guys. Again, I hope you're taking some sort of not so much knowledge, but like I say, some words of wisdom and some what I perceive to be in my trading plan and what I'm trying to do, you know. Again, like I say, I do this and I love to do this, whether I win, lose, or draw. I like to share a journey, and that is the whole purpose of this. It's about being real and not just fudging figures and showing you what is. I show you what could have been if things had held, like I say, when we go on about percentages the other day. But a lot of these other marketers, network marketers out there, they'll only ever show you winning things or indicators that if you got here, you can get out there. I want to do this in front of you. I want to do it live. I want to show you the highs as well as the lows, you know, and more so, hopefully if I show quite a bit of the lows, it's going to show you the mindset that I go into and what I do to protect and move forward, you know. You see a lot of these things out there where they say, look at this indicator, come and get the indicator for a few days. If you got in here, you can get that. But what they don't feel to tell you is these indicators that show you on the charts, all these little other blue squares or red squares or whatever squares they're getting in and getting out at, how many of those are there? How many times have they entered on those areas there? They're only ever going to show you the ones that complete. They're never going to show you the losses, to be honest. And that's what's the annoying thing about it. I like to sort of honesty, value, honesty, and integrity. Okay. Yes, I'm not perfect, but again, I have passed. I have passed a challenge. Like I say, if I go back onto my wall, that's where I've got this. I have passed a challenge, and again, I'm still trading it at the moment, but I'm using small risk management with it, like what I'm doing here. If I win, I build my equity. Okay, this is allowing me to be able to do that, and this is what I always fall back onto. I build a small pot, small lot sizes. I can then, once I get over the 2, 3, 4% growths, I can then increase my risk. That allows me to grow the account more. If I take steps back, like what I'm doing on here at the moment, I then go back down the ladder, reassess, and only risk minimal amounts. Because like I said yesterday, the pennies will look after the pounds. Don't forget where you start and where you come from with this. At the end of the day, you start from the beginning, and you need to be able to build those profits and the equity, So that's very, very important. This is where time and patience comes into it. Okay, I'm gonna pause the video, and then I'll be back in a short while, whether I'm going to be closing off the video for today. But like I say, a few words of wisdom throughout this session at the moment. Nothing is showing its hand terribly too much, but hopefully the few words that I've spoken, it'll sort of resonate with some of you. Okay, so I'll pause the video. I'll be back in a short while. Right, guys, so today, yeah, like I say, we took that little SL, but again, hasn't been detrimental to the account. We're still in a positive balance for the week, and that's what counts. From here, like I say, that Forex news coming looming, that's looming over our heads. There's been no volatility at all. When we look at the charts, just as a closing out phase, you've had a 40 pip movement from the start of the kill zone, and that's around about it. And that's really low, to be honest, with regards to a London session, especially the Great British Pound US dollar. But overall, this is the reason why. There's a lot of news coming out. You've got at the moment the euro at the minute, and then you've got the core PPI. You've got the core retail sales. You've got the PPI here. Again, we just open that up. It's the change in the price of finished goods sold by producers. And if we close that out, we've got retail sales, change in value price, the change of value of sales at retail level. Again, lots of news coming out this afternoon. And then on top of that, you've got the CB leading index, and then you've got further news from roundabout New York Open right the way through to 9 o'clock tonight. You've got news right the way through, so it's gonna affect the volume of what's happening now until we get into that phase. There is going to be no volume of volatility at all. As soon as we hit after the lunchtime of London and we go into the New York Open at 9 a.m. in New York, which is around about 1 to 2 o'clock in the afternoon of UK time, that's when we're going to see the spikes. That's when we're going to see the whipsaws. That's when we're going to see the volatility. And like I say, closing out on this video, if you trade prop firm funds, you need, and I'll underline this, hashtag it, highlight it, and whatever else, you need to stay out of trading, because it is inevitable you are going to endure slippage, whipsaws, and you're going to be on the wrong side of the trade. If you're on the wrong side of the trade you set and you get that whipsaw, even though you get that slippage and you've got an SL set, price can still give you a bigger loss than what that SL is set at, because price will not be recognized within that whipsaw effect on that candle, So just be mindful of that. Be careful. And like I say, I go back on today's word. you need to be patient, okay? After all, it's only one day out every so often. You're going to get days like this where you just need to take yourself away. Watch, mark the charts up, see what price does, and learn from that. That's my best advice on this, okay? That's the takeaway from this today. Sometimes you just need to stay out of trading altogether, mark your charts up, and see how price reacts from your markup, okay? And like I say, you can see from there whether your sort of bias and direction and things is like that is correct. It is too detrimental to an account to be trading through those volatile moments of news events, okay? So I'm going to close that out for today. This is around about the fourth, I think it's the fourth day now. Yes, we've had some nice profits. Yes, we could have had more profits. And my main purpose for doing these videos is it's given me something to look back on over the weekend, to review, to look through for a couple of things. One is to see if I'm doing the risk assessment correct, which going from this, I'm still in like a positive balance. Two, it's to keep the correct mindset of not getting into a revenge trade and just think one throw of the dice, I can double up on myself. That I seem to have locked in and dialed in. I never revenge trade no more. I'll take, like I say, one or two, at most three, if I'm on any sort of streak with what I'm doing, but still keep that risk management in place. 3 trades at most. From there, I've got to understand this is still a learning phase for me with this method. And again, I always like the forward test. I always follow what I do with honesty, value, and integrity. There's too much out there that will show you people winning all the time. I'm not like that. I like the sort of, like I say, a test, forward test. Yes, this is a paper account. I'm not confident enough to go straight into live trading with this. Again, if I was live trading, I would still have a protected account, but that's besides the point. We just got to know that I'm following a process, following a trading plan, and I'm going to see it through. Again, time and effort put into things like this, you would start to progress more on your learning, like what I will be doing in mine. And I'm sure once I start getting dialed in on this method and this procedure, and I start to refine and tweak that trading plan I've got in front of me, I'll be able to see the light at the end of the tunnel and see it working for me. At this time, it is working. It's just I've got to trust the process. Yes, I've took a couple of hits the last couple of days, but it hasn't been detrimental to my account. And hopefully the few words of wisdom that I'm sort of talking through from my mindset and what I'm thinking in the moment of the time of talking, hopefully that's coming through and you're taking a few little bits of notes and you're taking, like I say, you are taking note of what I'm saying, and obviously you can follow that through and build in your own trading plan, okay? So the word for this week has definitely been patience. We need to learn on that, sit on our hands. And once you've got your directional bias, obviously you stick to it. Don't move the fence posts. It is what it is. As long as you've got that risk management in place, then you understand that if you do come to where you get an SL, you understand you've got a protected account, okay? So again, guys, it's been fun today. As much as I'm not getting in on a winning trade, it can't be helped. You can't control the uncontrollable, okay? You can only control what is in set in your plan, okay? And my plan that was set out for them fence posts today. Unfortunately, consolidating price, we had a fake out up on here, which is what I did mention halfway through. But again, it went beyond the 10 pips that I thought. We got the pullback, and it has just wicked onto the area of that SL there. So again, not getting disheartened. I'm enjoying the process. I'm enjoying doing these videos, and I will be looking back on these myself personally when it gets towards the weekend, okay? So I'll see you on the next one. Tomorrow, there won't be a video tomorrow, okay? I've got a doctor's appointment. I've got to go and get my my monthly blood's done for the medication I'm on. So tomorrow will be a day of rest for me, and I'm not going to trade Fridays neither. So from a video and content aspect, the video is the last one for this week, and then I will be moving forward next. I think I'll start next Tuesday with the account still in the positive. Yes, it's only $5, but again, we start again, and I'll do this. I'll do these content videos every Tuesday, Wednesday, and Thursday. Okay, that's when I'll do these videos. Just keep an eye out on my wall. I'll be dropping these in the Discord as well. But from here today, it's going to be Tuesday, Wednesday, and Thursday. I'll not be doing tomorrow's or because I do have a doctor's appointment. Okay, please, if you're liking the content, comment, like, share. Let's get some engagement. And again, guys, if there's stuff that you want to talk about, head over into my YouTube channel, and then from there hit on the community, because I desperately, but not desperate, it's a bit of a hard word. I really want to get involved more with this sort of method, because like I say, my trade, my personal trading, I'll only ever look at like 1 or 2 trades a day, and I believe this model will fit perfectly in what I want to do. So it's given me my time and allowance at the chart to look for that 1 or 2 trades within those goalposts areas with regards to the kill zone on a morning and an afternoon. Because like I say, back in the day when I first started trading, I used to just trade here, there, and everywhere, because I was part of like I say, a network group where they pushed these silly softwares and indicators to you, and you were just spreading yourself too thin. With this, it's more direct. That's your time window. That's what you're going to be looking for. And within that time window, you're going to be looking for areas of breaker structure, also mitigation, and you're going to work from that parameters. Whereas back in the day, I was here, there, everywhere, because a bit of software was telling me to get in on a trade. Spread yourself too thin. It hurts you. It hurts your account. It hurts your progression. Having a controlled and more direct approach with what you're doing with trading. This is my time allowance that I can give to the chart. This is my time allowance that I can progress and do further education on what I'm learning with. And we have the perfect community for that. So again, giving yourself set parameters with your own fence posts is the way forward, rather than being here, there, and everywhere at all manner of different times of day. So if you want to come in and you haven't seen the Discord at the moment, just give me a shout. We'll get you inside of this. It's a very active group, and I'm sure you will all enjoy it. Okay, so that's me signing off for today, and obviously for this week. The next video will be, let's have a look, Tuesday, and it'll be the 24th. Okay, 24th of January will be my next video of me, my learning, my progression, and hopefully you tuning in and taking some notes and learning along the way as well. Okay, so I shall see you all later, guys. Catch you later.